Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel and Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And when I talk about setups today, I will be talking about an underlying asset. And that setup can be taken any number of ways with futures, shares of stock, or options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. So please feel free to post your questions and comments. Hard Rock, Lobster Roll, hello, glad you're here. My agenda for today: first of all, I want to go over economic data coming up for the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from this morning. And then we'll take a look at the live market. So when we get to the live market, if anybody has any stocks that they want me to take a look at, please let me know. All right, so first of all, economic data. As far as I know, there was nothing significant that came out today. But tomorrow, the fireworks begin with the CPI data at 8:30 a.m. Eastern Time. And then there are more Fed speakers during the day. So the CPI has been a pretty big market mover in the past. Probably not as much now, but it definitely should move the market. So that is tomorrow at 8:30 a.m. Eastern Time. And then on Thursday, the PPI data comes out at 8:30 a.m. Eastern Time. And then finally on Friday, consumer sentiment at 10 a.m. All right, let's start with the positional analysis now. And I'm going to start with the S&P 500. So this is the S&P 500 futures in Bookmap. And before I look closely at this chart, I'm going to take a look at a larger time frame so we can see all the levels that are in range. So this is a Thinkorswim chart showing SPX in this is a 30-day, 1-hour chart. Let me point out some levels on this chart. First, the dashed purple lines are showing the upper and lower weekly expected move. I'm sorry, the weekly, lower and upper weekly expected move. And then the dashed blue lines are showing the lower and upper daily expected move. And note that SPX traded right up to that level, and that level did act as resistance. And these come from the options market. I just look at an options chain in Thinkorswim to get this at the close every day for the next day. Let me point out some other levels on this chart. These are Spotgamma proprietary levels. First, here's the put wall at 4,200. That's the strike with the largest net negative gamma that can be expected to act as support, and obviously that is not in play. The next level up is the absolute gamma strike, and that's at 4,400. That's the strike with the largest absolute gamma. And then the next level up is the volatility trigger, and that is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, when SPX is trading above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And note that SPX is trading above the volatility trigger now. And the next level up is the call wall at 4,500. That's the strike with the largest net net positive gamma, and that can be expected to act as resistance. So those are the SPX Spotgamma key daily levels. There were no changes for SPX from yesterday to today, so no shifts in levels for SPX. All right, let's take a look at one other SPX chart just to see the levels that are in play for today. So this is a 1-day, 1-minute chart showing just around the 4410 volatility trigger acted as support, and yesterday that level was resistance. And then here's the upper daily expected move for SPX, and that level definitely acted as resistance earlier today. Let me check for questions. All right, so Michael asked, are you exporting your custom notes to Thinkorswim? And no. So in Thinkorswim, I'm showing, first of all, Spotgamma levels. They provide a think script. You have to manually update it every day. There's no automation there. I just go into the Spotgamma think script in the studies, delete the text that's in there, and paste in the new text. It takes a couple minutes. And then these levels, the daily and weekly expected moves, I do that manually as well. All right, so I hope that answers your question. So that's all done manually. All right, let's take a look at Bookmap now. In a Bookmap uses cloud notes, so it's a little bit more, I guess, a little bit more friendly. I'm using my own cloud notes. I fill out a spreadsheet in the morning with the updated levels, and I'm showing, let me clean this up just a bit. Forgot to refresh. So this is how I do it. This is the spreadsheet. Then I use an add-on in the Bookmap marketplace called Price Lines. All right, so busy morning. I forgot to clean that up. So let me point out some levels. First of all, I have SPX levels. There's the 4410 volatility trigger that around that level acted as support. I also have key SPY levels. There's the 440 absolute gamma strike, then the SPY 441 level, and then here's the ES 4450 level. And Michael asked, do you ever share your cloud notes? And no. I can recommend price lines, the add-on in Bookmap Marketplace, but other than that, I don't do that. So a lot of these levels are they are Spotgamma levels, so I don't want to share that. And now Spotgamma also has their own cloud notes. I just like my own. All right, so those are the levels in play for today. A pretty narrow range today. Again, I think this may be the calm before the storm tomorrow with the CPI data that comes out in the morning. And we'll talk about setups in a few minutes. So the main level in play for today is the SPX 4410 volatility trigger that was resistance yesterday, support today. All right, let's take a look at Nasdaq. Look at levels in play. And before I take a closer look at this chart, I want to take a look at a QQQ chart to show the QQQ levels. So this is a 1 day, 1 minute chart. And again, here I'm using the Think script that Spotgamma provides to their subscribers. Let me point out some levels here. The 365 level, that is the absolute gamma strike for QQQ. And then the 366 level is the volatility trigger. And that level did shift lower. So yesterday the QQQ volatility trigger was at 368, so it shifted lower to 366 now. And that level did act as support just before noon there. So the range really for Nasdaq for QQQ has been around 365 to 367. And I forgot to mention on the S&P 500, SPY levels did shift lower pretty significantly. So the volatility trigger shifted lower, put wall shifted lower, and then the call wall, and that's really the most significant shift lower, shifted lower from 450 to 445. So that is that's bullish. I'm sorry, that is bearish for the for SPY. When all those when the multiple levels shift lower, that is definitely bearish. All right, and for the QQQ, volatility trigger again shifted lower, the put wall shifted higher, and for NDX, the volatility trigger and the put wall both shifted higher. All right, let's take a look at levels in play. Again, I have my cloud notes here showing QQQ levels. There's the 365 absolute gamma strike, 366 level, the volatility trigger, and then here's an NDX level, the 15,000 level. And then I also have just the big round numbers for NQ, the zeros and the 50s. All right, so those are the levels for Nasdaq. I talked about shifts in levels. Again, SPX, there were no shifts in levels. For SPY, volatility trigger, put wall, and call wall all shifted lower. I interpret that as bearish. And for NDX, the volatility trigger put wall did shift higher, and for QQQ it was mixed, volatility trigger lower and put wall higher. All right, let's take a look at market makers' position on the gamma curve so we can understand how they might respond to changes in price and applied volatility. So first of all, what I want to focus on here is gamma notional. This is market makers' position on the gamma curve for SPX, SPY, NDX, and QQQ. So what this is showing is for SPX, market makers' position on the gamma curve at the beginning of the day is right around 280 million. And that did shift higher from yesterday. So for SPX, market makers' position on the gamma curve became more positive. And all these numbers actually shifted higher. So for SPY, market makers' position on the gamma curve became less negative. And then for QQQ, that number also became less negative. So to me, this is indicating lower volatility trading range today, especially considering CPI data coming out tomorrow. All right, let's take a look at the vanna model now. This is for SPX based on the market maker's position on the gamma curve at the beginning of the day. What this chart is showing is market maker's delta notional on the vertical axis and how that changes with changes in price shown on the horizontal axis. There are two curves on this chart. The first, the gray curve, is showing how market makers' delta notional changes with changes in price only. What this is showing is if price increases, market makers will need to sell futures to hedge their delta exposure. And that's typical of a positive gamma environment. And then on the second curve on this chart, the purple curve, adds implied volatility to the equation. That's showing how market makers' delta notional will change with changes in price and implied volatility. And that change in delta with a change in implied volatility is the vanna effect. Vanna is a second order Greek, hence the name of this chart, the vanna model. And what this purple curve is showing is price decreases, market makers will have significantly more delta notional to hedge as predicted by the price only curve, the gray curve. So this is showing as price decreases, they will need to sell futures to hedge their delta exposure. And that is typical of a negative gamma environment. All right, let me check on the price of SPX right now. So right now I've got SPX trading at around 44.21. So that's right about here, pretty close to the bottom of the curve. So what this is showing is if price increases, there will be really no vanna tailwind to price. You can see as price moves to the right, this curve really flattens out up to a certain point. Looks like about around 44.50. And at that point, market makers will have to start selling futures more aggressively to hedge their delta exposure. And then on the other hand, if price decreases and implied volatility, if price decreases and implied volatility increases, market makers will need to sell futures to hedge their delta exposure. So this gives us an indication of how market makers may be expected to react to changes in price and implied volatility. Let's take a look at SPY. So we know that at the beginning of the day, SPX, gamma notional was positive, slightly positive. For SPY, slightly negative. SPY is trading right around 441, right around here, pretty similar position, just no indicating really there's no vanna tailwind if price increases. And then on the other hand, if price decreases, market makers will need to start selling futures pretty aggressively. A very similar curve for QQQ, which is trading at around 366, right around here. Maybe a little bit of a vanna tailwind if price increases. All right, so based on that, I was looking for based on this information, looking for a lower volatility day, trading range, and for the S&P 500, a bearish directional bias. And remember what I said at the beginning, I always confirm my thesis with order flow and hedging flow. And for the setups that I'll show, the order flow did not confirm my thesis. All right, so speaking of that, let's start with setup review now. I'm going to start with the S&P 500. This is the HIRO chart. Hedging Impact of Real-Time Options, HIRO. That's what HIRO stands for. What this chart is showing is price, that's for SPX, and options trades and market maker hedging pressure, hedging flow for a combined signal SPX, SPY, XSP, and ES futures. One of my key tenets of trading is that options trades and market maker hedging flow are a key driver of price action in the equity indices, especially S&P 500 and Nasdaq, as well as many stocks. So that's why I place so much importance on this. When options traders are buying or selling puts and calls in all these instruments, market makers are hedging with ES futures. All right, let's zoom in on this chart, take a closer look, and note that, again, this is a combined signal, and Spotgamma does provide the individual components if you want to look at those. SPX, SPY, and ES futures, again, go to this combined signal. So the setup that I want to point out is right here, just around 10:15, and that was when price was down just around the SPX 4410 volatility trigger. And note that at that point, options traders start taking positive delta positions pretty aggressively. Let's just zoom in on that a little bit. Note the sharp increase in the HIRO line. And price responds just about at the same time. So let's take a closer look and see what traders are doing. So first of all, we can separate out puts and calls. That really does not provide a lot of clarity. They were buying calls and buying puts. I think in this case, the total line gives more clarity. We can take a look at the next expiry, which would be the 0 DTE options. And note the notional value here. We'll turn all trades off. So it looks like really the notional value for next expiry, the green line, is positive, and for the purple line it is negative for all expirations. Let's just take this off the chart, and this is showing the very strong correlation between 0 DTE trades and price action. So this 0 DTE trades are a key driver of price action, and Spotgamma has talked about this frequently. These 0 DTE traders often have a mean reverting influence on price action. They're at lows, they are starting to take positive delta positions, and at highs they start to take negative delta positions. They're fading the moves. And at least for this setup right now, this appears to be what has happened. All right, so let's go take a look at Bookmap. I'm going to zoom in on the morning. So we'll focus on order flow here, and oops, that is Nasdaq, sorry. Let me go back to the S&P 500. I don't know why these green lines are staying on the chart. Let me try that one more time. Oh, I turned off the wrong lines. Give me just a moment. All right, that's better. All right, let's zoom in on this. So we know right around 10:15, right around here, options traders started taking positive delta positions pretty aggressively. And this is so that is, I've talked about building an arrow. So that is one piece of the narrative. We know that options traders are taking positive delta positions, and the second piece of this narrative is this key level that we expect to act as support when tested from above. So that's what's happening here. That's the second piece of the narrative. Third, watching order flow. Note the shift from pink volume dots showing market sell orders, aggressive sellers moving price down to this key level, and then aggressive buyers start to come in, shown by the green volume dots. And there were also some larger traders. Oops. Sorry. It's going to mess this up. Okay. All right, the second thing that so we note the level. We know that options traders are taking positive delta positions. Here's the third piece of the narrative. Large options traders, large traders are coming in with iceberg orders. They use to hide their size. So that's showing 2,100 contracts, 7 different executions, 683 contracts, 773 contracts. Large traders in there with iceberg orders buying. And that's enough for a reversal higher at that level. Options traders taking positive delta positions as price approaches and reverses higher at a key SPX level. Larger traders coming in with iceberg orders, and order flow shifts bullish at that level. So there's your long setup. Price targets above, primarily liquidity targets today. just around 44.58, shown in the heat map here, and also just below, around 44.60. All right, so that's the long setup in the S&P 500. Let's take a look at Nasdaq now. All right, and it looks like Nasdaq reversed right around the same time. Let's go take a look at Hero for Nasdaq. So for Nasdaq, there is a combined signal. This is for NDX and QQQ, and this was just a beautiful divergence setup. And this is really the kind of thing that I like to look for in with Hero, this divergence setup. So what I'm talking about is options traders start taking positive delta positions, just right around before 9:45. Start taking positive delta positions, and it takes a while for price to move higher. Maybe 25-30 minutes later, price starts to move higher. Great divergence setup there for a long again. Let's go back and take a look at Bookmap. I'm going to zoom in. So we know there was the divergence, that as price was moving down, options traders started taking positive delta positions. And then we're just watching for the shift in order flow at a key level. And that level was the QQQ 365 level, or around that level. NQ overshot that level, just like the ES overshot the 4410 level. And you can see the shift in order flow. Aggressive buyers start to come in. And then iceberg orders. There are 301 contracts. Of course, the number for NQ is going to be much smaller than for ES. Also, the shift in CVD here starts rising. So really the key to this, the most clear setup, was the divergence in Hero that really set this up. You just had to wait patiently for the shift in order flow for this setup. Price targets up above, primarily the QQQ levels, 366, 67, and 68. All right, let's take a look at a couple of other setups for stocks. And I want to do the same thing that I have been doing for the last couple of days, looking at these new volatility alerts. So let me point out a couple of these, and I'm going to go back to the morning. So the first one, and there were only a couple good ones that I saw today. So first of all, Meta. So what this does, let me go back. I forgot to check the time. I think that was around 9:50 that came in. So right around, let's zoom out. So that was a bullish volatility alert right around 950. And that turned out to be a very good setup. Note the target above at the 300 call wall key gamma strike. All right, let's go take a look at Bookmap. So we know that we got this alert at around 950 as the hedging flow shifted from negative delta to positive delta. Let's go to take a look at Bookmap. Go to Meta. So remember, 300 is the target, the primary target at the call wall key gamma strike. And then here's the alert right around 950. So another very timely alert from these new volatility alerts. I've talked about in the last few days really good alerts in Tesla and Nvidia and Apple. Primarily Tesla and Nvidia, also QQQ. So today Meta was the setup, the first one that I want to talk about, with the call wall, and note the liquidity at that level as the final target. Tone these down just a little bit. Oops. And note the liquidity at the 298 level. Typically it comes in right at the cash open, but there was liquidity at the 298 level below before the cash open. Normally it comes in like this at the cash open. In this case at the 300 level, that is the highest level of liquidity. Those are limit sell orders, and those orders tend to attract price. All right, so that's the first stock setup in Meta. And then the next one was Nvidia. So let's go back and check for the alert in Nvidia. And note there are a lot of alerts that may or may not work. Actually, here's one for SPX. Let's just see when that came in. Right around 10:15. So that was the pretty close to the long setup there at the 44.10 level. So that was a good setup for SPX. And I've already talked about that, the S&P 500. So let's go back and take a look at these again. And then here's Nvidia. Right around the same time, 10:15. Zoom out and look at the entire chart. So that turned out to be a very good alert as well. All right, let's go take a look at the Bookmap chart for Nvidia. And again, remember that's right around 10:15 right here. So pretty sharp reversal there, V-spike reversal. So you would have to be quick for that one. But that was good for about 5 points. All right, so Yoga Matt asks, Spotgamma alerts, can they be sound enabled? Not that I know of. So this is something that's new. So the put wall and call wall breach alerts have been around for a couple of months at least, maybe a little bit longer, 2 or 3 months. These volatility alerts, as far as I know, they were just added last week. So I'm sure Spotgamma intends to enhance these, provide additional ways for these alerts, additional notification, whatever. I just don't know at this point what additional plans they may have. So I would assume at some point, yes, they will be sound enabled, but as far as I know, not right now. All right, and Sampan asks, wants me to show again where the alerts came from. So I'm going to go back to Spotgamma, and they're on the dashboard and any dashboard page on the upper right corner. So see that small bell icon, you just click on that. Click on that and it shows you all the alerts. Okay, Sampan, great, you found it. All right, then Hard Rock Lobster Roll wants to look at the order flow around the drop around 12:30 today on ES or SPY. So let's take a look at ES. That'll usually give us more information. And let's go take a look at Hero and see what options traders were doing at that time. So really it looks like this move initiated somewhere between 12:25 and 12:30. So let's see if options traders had anything to do with it. So not really. I don't see much of a clue here in Hero. Hero was pretty flat. And price, yeah, I really don't see any lead effect here, just more of a confirmation. And maybe that doesn't help. Put some calls. No clue there. So I don't see any real big clue in hedging flow there. I think the only really thing you could read into this here is the iceberg orders. Not necessarily knowing there was going to be a big drop like this, but larger traders were selling as price moved up. I don't know, my stop. So there's a buy stop run shown by these green dots, and these green dot icons are kind of obscuring the iceberg order shown kind of behind that. See, there's iceberg order behind the green dot, so you really can't tell what that is. There's another iceberg order, so they were selling as price was moving up. Then, could be just a lack of buyers. Iceberg orders, large traders selling with iceberg orders, shift in order flow came on pretty suddenly. So I would be, even without knowing this was going to happen, I would be looking for an entry point for a short. We can take a look at SPY, see if there's anything there. Now, note my SPY levels here. I did not have a chance to update those this morning, so those are not up to date. And definitely no additional information here for SPY. I haven't checked what the total volume is today. It could just be a lower volume day. Large trader came in. So again, the only clue the clues were here, this pretty sharp run, stop run up to this liquidity at that's at 44.65.25. So stop run up to that level. We know that again, larger traders were selling with iceberg orders. And Hard Rock Lobster Tail, you're welcome. Sam Pan asked, those are buy iceberg orders, then why go short? No, they're sell iceberg orders. So when the blue line is falling, I know that larger traders are selling. So when this blue line is falling, this is a cumulative number, so these are sell iceberg orders. And that's also shown by the, and this is all customizable. You can customize this in Bookmap. So I'm showing sell iceberg orders with this pink color, and I'm showing that above price. So those are buy stop orders running up to that 44.65 level, as larger traders were selling with iceberg orders. And then note both the stop orders level off, so they're not driving price any higher. Cumulative volume delta also levels off. Bookmap stuck a little bit. Well, let's go back to ES now. Take a look at the live market. First of all, let's see what options traders were doing. So let's go to the live market now. Take a look at what 0 DTE traders are doing. See if that provides any clue. Not really. Alright, so this is just a confirmation here, looking at Hero. Options traders are pretty much in sync with price action. All right, slow to Zari. Is there any change? Apple and other stocks making new lows. So we can quickly scan through. Apple moving lower. So Meta rolling over, Microsoft, Nvidia, see what Tesla's doing, also moving lower. Let's take a look at Nasdaq. Let's just see if we can look at a shorter rolling window period. That really doesn't help that much, still pretty flat. Go back to the 1 day look back period to zoom in a bit. So pretty much the same as the S&P 500. Strong correlation between options trades, hedging flow, and price action. And BOG Landscape Services wants to look at Costco. So we can take a look at that. Costco's really not a name that I follow. I think the options market is pretty thin in Costco. You know, I don't have it in Bookmap, but here's what options traders are doing in Costco. This is a positive notional value, and it's a pretty small number compared to the S&P 500. For example, the notional value for the S&P 500 is over 1 billion, and for Costco alone is 14 million. All right, so there you go. There's Costco. Sampan wants to look at BABA. We can do that. So there you go for BABA. Pretty strong correlation between hedging flow and price action. Still a pretty small notion of value. So traders are buying puts and selling calls. That's shown by this orange number showing calls. That's negative. And then they're selling puts. I'm sorry, I don't know if I said they were buying puts before, but they're selling puts. So that is positive. Positive notional value, positive delta. They're selling puts and selling calls. All right, so Sampan, there you go. I did look at puts and calls. And BABA's still going high. Why? I don't have it in Bookmap. Sorry, I can't say. You know, you just have to look at order flow in Bookmap to say why. So you know, obviously there's some buyers in there. And one other way to look at this is just look at the slope of the line. So starting about, that's a notional value for the entire day, which includes this big drop here. But starting from this point, right around 10:20, 10:15, 10:20, when everything else that we looked at started to reverse higher. From that point, the hedging flow has been positive. So this point on the purple line is lower than this point on the purple line. So again, from around 10:15, the hedging flow, the options trades have been positive delta, and hedging flow has been positive. We'll go back and take a look at puts and calls. So really, it's been calls that have been driving price action. Overall, the notional value is negative. It looks like the I'm not quite sure what the opening price is for BABA, somewhere right around here, and it looks like price has recovered to just around the open. So price moved lower in the morning as traders were selling calls, shown by the sharp drop in the orange line, and then started to recover higher when traders started buying calls. And really the put line has been pretty flat all day. The blue line has been flat. So traders selling calls in the morning, driving price lower, and then they changed, started buying calls, and price started moving higher right around 10:15, 10:20. And from that point on, the notional value has been positive. All right, so this call drop at 1340, that's pretty small. I don't know if I can come up with an definitive explanation for that without looking at order flow and Bookmap. All right, let's take a quick look at the indices, and then we'll wrap it up. So now it looks like a divergence is setting up here in the hedging flow in the S&P 500. All right, so Slotatari says Loretta Mester, Federal Reserve Bank of Cleveland president, says 2 more rate hikes would be reasonable this year. I think that is pretty much priced into the market. I don't think that is anything new. I think that's what the market is expecting. All right, so this looks like a divergent setup here in the S&P 500. Note the hero line starts to rise right around 220, and then about 5 to 10 minutes later, S&P 500 price starts to rise higher. Let's go take a look at Bookmap. So price reverses higher just above the ES 4450 level as options traders started taking positive delta positions the shift in the order flow, pink dots to green dots. There were some iceberg order buys here. I need to change that, change the settings on my icebergs and stop orders so the one is not obscuring the other. All right, so that is the S&P 500. It looks like a reversal higher set up by a divergence in the in Hero and options traders. Let's take a look at Nasdaq, and then we'll wrap it up. Let's see if there's similar divergence in Nasdaq. Yeah, it looks like it. Looks like, but Nasdaq is rolling over again. Larger traders are coming in with iceberg orders. Or if you're looking for a long in Nasdaq, I would watch this pretty carefully. I'd probably want it to make a higher low before I took a long setup. All right, let me do a final check for questions. So SBTL1 says, "Hi Doug, hello. Is this a preferred way to see divergence?" You can wait for the alerts that sometimes will notify of a divergence. I focus most of my attention on the S&P 500 and Nasdaq, and you just have to watch. And sometimes they're very apparent, like the divergence that I showed for Nasdaq this morning. And you're welcome, Sampan. All right, so Karma FX says, "I would like assistance with my Bookmap whenever you get a chance." Karma FX, I do offer mentoring services, and I can help you with Bookmap. So contact me in Bookmap Discord. My name in Discord is Doug P. Or if you have a few simple questions, you can post them in the Options-Doug chat channel in Discord as well. But the best way is just to get in touch with me in Discord at Doug P. All right, and BOG Landscape Services asks, "What is an iceberg order?" An iceberg order is a specific CME order type. And it is, again, this is for CME futures. And Rhythmic Data is the only data provider that provides that information. Bookmap uses that information to show, shows that information with this MBO bundle, stops and iceberg order. So an iceberg order is just a specific order type for CME futures that larger traders use to hide their size. Again, just like a stop order is a specific order type that CME keeps track of and typically used by smaller traders. Iceberg orders typically used by larger traders. And you can just do a Google search for an iceberg order, go to the CME website. You should be able to find out anything that any more information. You can also look for MBO data, market by order data. That's where that comes from. So Karma FX asks, so they can seem smaller than they actually are. Yes. So again, that's what they use to hide their size. So think of a tip of an iceberg. And that's, again, larger traders want to hide their size. So they use these iceberg waters. And Bookmap, with this MBO bundle, detects those. It can detect cancellations and executions, transactions. All right, my time is up. I want to thank everyone for watching. Thank you very much for your questions and comments. And I will see you tomorrow. Remember, CPI data comes out at 8:30 a.m. Eastern Time. And I will be talking about the aftermath during my session in the afternoon. Thanks again, everyone. Have a great afternoon, and I will see you tomorrow. Bye.